Weekly stock market update part 2, and we're going to start off with the Nasdaq where we left off in part 1. And what you can see is still some room to go, and you might say, well, that's not too much. Well, actually the way to look at it, and this is the trick you use, you go back up there and you say, well, when it was at a similar level last time, what percentage gain was that? And that's still relatively substantial. Just watch out for the drawdown danger, which is that's the depth of a drawdown, i.e. peak to trough, and that's the duration before it goes back. And that doesn't necessarily guarantee itself when the market's moving upwards, as it is there and therefore here, but you can see it happens. Now, even worrying is that one. The drawdown duration was that, and the depth was this. The Nasdaq can easily do that again in an upward move. So that's why I do Wednesday and Friday updates, because it's worth it. The sums of money involved and the percentage we can make are worth it. That's Apple. As you know, I got out of 50% of it. I'm not buying any more. I hold what I've got. And that's your Apple. Alphabet's on the Great Investments Program only. Microsoft, I continue holding, well aware that it is now at these levels, which last time it was at those, it still had a bit more to go. But you know the rule, if it drops X%, sell Y now. What's X? Well, it could be 5, 10, 15, 20, 25. That's easy. Y, how much you'd sell. So X is how much it drops from the high since you bought it. Y, how much you'd sell, depends on your risk appetite. If you're very risk averse, you'd sell 100% here. If you're very risk loving, you'd sell 100% here. And if you're somewhere in between, you would put numbers in here based on your risk appetite. Simple as that, okay? Why? Well, because then it's not open to interpretation, because it's mathematics. Secondly, because you're not killing the goose that lays the golden egg prematurely. You're waiting to see if it stops, or looks like it's stopping to lay eggs. Great investment program only for the Amazon one, and a lot of you on the program have made a hell of a lot of money over the past 12 months. Congratulations. So this is what I'm anticipating with this. All perfectly happy and fine. Just keep an eye out for the drawdown danger. I show you how to do that already. I showed you depth times duration. Look on my YouTube for why IFA should be locked up. And this again is, if it drops X, sell Y. Call it the NVIDIA strategy. Very simple, very straightforward. It's what stopped me from exiting prematurely here while this goose was still laying eggs. Not the narrative, nothing else. And it continued upwards. Okay? Same with Meta, by the way. And Micron Technologies, which we also own. Exactly the same procedure. Now with this, we got in January, got out in October, as you know, if you follow me on Telegram, after which it proceeded to continue going upwards, but then has dropped like a rock. Why did we get out? Well, it was a special situation to begin with, and as soon as the MACD fell below its own moving average, I wanted to get out. Now remember, the rules are, if the MACD is rising, that's positive, sideways, amber alert, falling, double amber, and falls below its own moving average, and you really don't want to be in that stock. Nothing good comes of it. Meta, NXP, upwards. Only warning I'd say is look at the drawdown danger. Not much on that. Qualcomm, all fine. Still looking for that to rise up. ServiceNow's on the Great Investments Program. Some good special situations in the past over that 12-month period. I'll discuss those on the Telegram channel, alpeshpatel.com/links for that. Now, you can see here this is a bit overbought. It's not one we own. It's one which I started covering after it moved up, because A, it's popular, and B, to show you even after things have moved up, you haven't necessarily missed the boat. And of course, that's what it's done along there, but it is getting a bit toppy. We won't just buy and hold forever, because that'd be idiotic. All those people who say, oh, just buy and hold forever, and then they watch 90% drops in their prices or whatever, and they go, yeah, but look, it came back again. Yeah, great. 2 wasted years, 0% return. Yeah, but I don't mind wasting my life and getting no return on my money. Alpesh, why would you ride that if you can avoid it? And why would you want to miss out on this massive gain? Because you did miss out on it, because it only paid for that loss. Why would you be that lazy and stupid to say, well, no, I'll just buy and hold forever? What if there was a way of getting out of it? Like, oh, I don't know, if it drops X%, I'll sell Y. Simple. Okay? Anyway. And what about getting back in, Alpesh? Yeah, well, just don't bloody hold them when the monthly MACD is falling. Simple, right? When it's not, you can hold it again. Anyway, PayPal shows you that we don't only look at the MACD. That's why we look for value, growth, income, cash flow, Sortino. and this is still got a long way to go before we'd consider getting into it. Pensions on YouTube, 1.3 million views. Cisco's come off a bit, or Cisco, a little bit. This hasn't fallen below its moving average. If it does, we get out. The weekly, which tends to be a bit more sensitive to market moves but less important, and the monthly is more important but less sensitive, is falling, and you may well get a repetition of this kind of thing. And people might say, well, wait a minute, you got into it even though initially you said it wasn't for you, and now you might have to sell out of it. Yes, no ego. There's 20 companies, and let's say this is one of them, and we have to get out. We have to get out. That's fine. We allow for that in the 20 companies. That not every single one will always go up. TikTok, 330,000 followers now. Do follow me on there. On YouTube, you'll see a whole load of videos on a variety of funds, from Bailey Gifford to LNG to every single fund you could ever want me to do a video on. It's all in there. So do watch those. Please also follow me. Don't ask to connect unless we've met. Follow me on LinkedIn, okay, where I'm a top voice. Also, like, oh, there you go, like Bill Gates and the parties at his place. Lots of lovely reviews. Have a look at Campaign for 1 Million. My ambition is to reach 1 million people and teach them how to add an extra million to their portfolios across their lifetimes. That's 1 trillion, 1 million times 1 million. And it's a worthy goal to leave as a legacy of your life, especially when you've written 18 books on trading and investing and done innumerable Bloomberg TV shows and your own program, and 200 columns in the Financial Times and lectured on it at Oxford University. So it is a laudable goal, I think, to spend my remaining years. And quite frankly, if this chin gets any bigger, there won't be too many remaining years. Enjoy campaignfor1million.com. It's entertaining.